Today is April 19th. Much better day than yesterday. And we're going over the spring pattern on the Emini S&P. And I want to share some thoughts with you with regards to what I'm seeing and what we said to watch for in the last video. And I'll put a link in the description to the last video, or if there's a way to put a box on it where you can click this box to look at the last YouTube video. I specifically talked about what the spring pattern, what I was watching for it to do, and in particular I was kind of waiting for it to hit a line on the bottom of the pattern. And I want to show you today what I mean by that, because it didn't hit that line and it is now behaving like 6 out of the 7 last years did. So first off, it's important to have the same indicators on the chart that I had in that video. So we did have the Flux Orion indicators on there. I am going to put the Flux daily cycle markers on both charts. And I want to just refresh everybody's memory as to what the components of the pattern were and what we were waiting for it to do. So here's 2016 over on the left, and I just want you to get your eye focused on the spring pattern here real quick. We have a phase 3 and a phase 4. Everybody see that? And then over here we have a phase 3 and a phase 4. These little red and big red dots right there. We have the market push up into a new high and then pull back into a phase 1, a little green dot. We have the market push up into a new high and then pull back into a little green dot, phase 1. The phase 1 produces a push and then a pullback into a phase 2. The phase 1 produces a push and then a pullback into a phase 2. The market then pushes up into a phase 3, pushes up into a phase 3. The market then drops down, fishing expedition, takes out all the prior swing lows and terminates at a phase 4. The market then pushes through all the prior swing lows, terminates at a phase 4. Waldo, there's then a push up back into the price. It looks like a head and shoulders pattern a little. And you'll see in 2017 we pushed up back into the prior swings. Okay. Then it pulls down into a phase 1, pulls down into a phase 1. We have some large volatility candles, up, down, up, down, up, down, stop run. We have some large volatility candles, up, down, up, down, up, down, stop run. And then we have the phase 2. So everybody sees what's going on here with the phase patterns. Now, the very same thing, this pattern here exists in 2015. And I'm not going to go over all of them here today. I did, however, want to go over some of them with you. And here's the one in 2015. And in both cases, when we got to the phase 2, the market reattacks the prior swing high, the one that started it all. Like a bull flag, it breaks through and attacks the new high. We have the same pattern in 2014. March, April. And in 2014, only one of the components of the whole pattern is different. In 2014, when it was supposed to go down into the red dot, it in fact went the opposite direction and inverted. It went up into the red dot before completing the cycle, and at the phase 4 signal, going up and taking out the new high. Okay, so this pattern seems to be happening over and over again. There was one difference in 2017 relative to 2016, and that was what happened before and just after the phase 2. And so we had said in the video that there was no on record, no pattern except for one where the candle had dropped below the midline of the channel that it was in. And that had only happened in 2012, and that the market was going to drop based on that. But also in that video, if you go back and watch, I was specifically watching for it to touch the lower trend line and break it. So here we are, and it obviously went the other way. Let me show you what I've been doing with these trend lines here real quick, because I think it's important to understand where we're headed next and why. Historically, when we talk about time resistance, there are a series of 6 rules that I've begun to internalize when watching price action. So the 6 laws of time resistance, and that is to say, we've uncovered a phenomenon, or we've rediscovered a phenomenon that has been taught now for over a century. That is to say, when you find a time cycle that's important, so let's say this is a candle with a red dot, and that red dot candle closes down. The close of that candle is resistance. The close of that candle becomes support, becomes resistance. That is to say, in the moment of the time cycle, there is a release of energy. There's a release of energy vertically, or a release of energy horizontally. The markets very rarely at a time cycle will sit and consolidate. If you're in a chop zone, if you're in a pattern 3, you'll get that. But all the way back to Gann, there's an understanding that when you arrive at a time cycle, the market will move vertically. Okay, but what a lot of people have a hard time understanding is that the market also moves and has a horizontal component. And Gann teaches us in his works that there's a horizontal element to this vector There's a velocity, and there's also an angle. So here the angle is 0. And for those of you considering coming to the Las Vegas seminar in a couple weeks, I have a class dedicated exclusively to this, and I can't wait to teach you one of the most exciting discoveries about time resistance and time volatility combined together. We finally found a way to combine the vertical and the horizontal together. And I can't get into it today, but please make every effort, if you can, to register for that event here May 1st and May 2nd. You'll hear me mention it a couple times because someone always says, I didn't know about it. So beg, borrow, and steal if you can to get to that, because that one class alone, I think, is worth the price of admission. So this support level becomes an area where Gann says we're going to see highs and lows form. Well, it's in regards to that. It's in regards to this line that laws apply. It's in regard to this line that the 6 laws of time resistance are applicable. And so one of the first ones that I noticed, how do we know if it's a time resistance line? You will have to the tick touches. Number 2, you'll have missed by 1 tick missed touches. Number 3, you will have wickiness, not like WikiLeaks, wickiness, wickiness at the lines. Number 4, you'll have consolidation between the lines. Number 5, there will be respect of the 50% rule. And number 6 isn't something we're gonna get into now, but projection of the last gap up or down. So this is very important. If you're a new customer, if you're an old customer, if you're an in-between customer, you're getting 8 years of heartache and heartbreak right here. So if you can memorize these, or when you get this video, screen grab it, print it out, put it on your desktop, go back and look at it 100 times. It's important that you get this, as you'll see here momentarily. I'm going to come back to our chart now. And again, in Vegas, I'm going to teach about why I have the lines here the way I have them. I don't have time this morning to get into it, but I do have these lines here. And in a couple weeks, I'm going to teach you about angular time resistance and resonant angles in markets. But for right now, I want you to understand some of the laws of time resistance that I've invoked into this drawing. I want you to see that there are places where the market has touched these angular lines like to the tick. So there are places along here. Garrett, do you see where it's come up and just sort of kissed it and moved away? Down here as well. Okay. I also want you to see that there is wickiness at the lines. And by that I mean this. You'll have a candle where the candle closes or opens. And just below that open or close, Gary, do you see how it sends down these little tendrils? Kind of like a vine growing over the edge of a balcony somewhere. Kind of like a bird sitting on a telephone wire, and the bird's feet dangle, or their tail feathers dangle over the edge of the line. And so when you see me refer to this wickiness near the lines, that's what I want you to visualize and kind of understand. The wickiness will determine the location of the line. Okay, so horizontally, if we're working with time resistance, future candles, if this line was valid, future candles, you'll notice, will have wicks like this below the line, and then they'll have wicks like that above the line. It's as though they send scouts down or scouts up to see if there's enough energy to close above it. But ultimately, Gary, this behaves like saran wrap, meaning they push all the way down like there's a plastic film here or a membrane, and Gary, that membrane pushes everybody right back up towards the end of the day. The same thing here. They try to stretch that membrane up, but at the end of the day, there's not enough force to break through and close above. And so the bodies of the candles end up coming right back to this level. So that's what we mean by wickiness at the lines, by to the tick touches, and consolidation between the lines. And again, in Vegas, we're going to go over how I drew these lines, and you'll get a piece of software that'll automatically draw these lines, in fact. The one rule also is the respect of the 50% rule. So in this case, we have time resistance at the upper and lower edges of the channel that the market is in. And so, Tim, when I discover that, I will always find a midpoint. The midpoint, whether it be a horizontal resistance line cluster or an angular resistance cluster, always exists. It's always there. And you'll see the same kinds of rules, the same laws that we've just taught, which I think I deleted over there. Oh well. You'll see those same 6 laws that should be here play out over there. Meaning, Gary, we'll see wickiness at the line. We'll see touch of the line, miss by 1 tick, touch by 1 tick. And so, Gary, underneath the 50, you'll see the wicks hanging down and the bodies of the candles right at the 50 right there. Touches by 1 tick. That kind of thing. So everybody see that? Why the 50 is where it is? Okay. Now, when there's a horizontal sequence, the market will move through that sequence like a staircase. Stand by with me one moment. And I want you to see what I'm about to show you because it's important. I'm going to pull up the daily cycle markers, and I'm going to do it on the Euro US dollar. And I'm going to bring this down to a 15-minute chart. Okay. So these are the daily cycle marker lines, Gary, off of the Euro US dollar. And just to help you see that, again, I'm going to go back to the daily. And can everyone notice how at the close of each of the daily cycle marker dots rather, like this one right here, Gary, there's a phase 3 little red dot. Tim, do you notice at the close of that candle how it spawns the horizontal line off to the right? Okay, so Gary, here's the wickiness that we talked about. I know it sounds silly saying the word, but do you notice the jellyfish tendrils hanging down? So here's a completely different market with those same kinds of reactions below there. But then Tim, also on this candle, on this day, do you see how it touches the line to the tick before it goes up to the next level? Okay. Every once in a while, guys, ladies, this doesn't happen. Every once in a while, this touch represents completion and closure. The touch or the piercing represents a completion of the level or a closure of that level. Okay, and what will happen is that the market begins now, Tim, to move progressively higher through the levels. These are horizontal levels. This is 0 degree resistance. It'll start to move up through progressively the levels. So we have completion of this level. It comes up to the next level. And then, Gary, you see how it touches this next level here? Kisses it. For it to advance to the next level, we need completion, or we want to watch to see what the reaction, Tim, will be at the level below before it advances. And you'll notice in this case, students, that we have a completion. And so this wickiness below that line gives us an indication as to what their intentions are moving forward. And then, so Gary, we have the ability now to come up to the next level. And can you see that level, Tim, how we get the wickiness there again? There's completion. Well, occasionally we don't have completion. Occasionally we don't have completion. And so, Gary, it sends the forces upwards, but there's a gap. It doesn't get there. And when there's a gap and doesn't get there, it's very indicative of a failure to complete. And so I want everyone to notice what happened in the euro dollar over here. Here's the level at 487. There's the bottom at 494. Can you notice that there's an invisible force field of sorts where it doesn't seem like they can get any closer to the level than that? This is what I describe as a miss by one tick phenomenon. Okay? Because most of the time, Gary, it does what the euro just did here. You see how it just kissed that level? This represents completion, meaning the uptrend in the euro right now is preserved. I expect it to come back down to here and then to the next level up at 752. But down here, we don't have that. Down here, it's as though somebody has slipped in an invisible piece of glass, and they want to touch the floor under the glass, but they can't because of that barrier. Inevitably, what happens is when it comes and touches the next layer above, before it completes, it will go to the next level above. Let me say that again. In the miss by one tick phenomenon, phenomenon, it'll come all the way down and go, let's go, let's go, let's go, we can't, I don't know why, there's so much pressure here, forget this. It'll come up. If it hits the level above, Gary, it'll come up to the next level. And this is a very bullish signal. And I'm going to go over this in more detail, where you're really going to get it in the Vegas conference. Okay, but I want you to keep that phenomenon in mind. And come back with me now to the angular resistance of the S&P Spring pattern. So Gary, I'm pretty comfortable with where these lines are because they all fulfill the rules of time resistance. And Tim, do you notice what happened in the spring pattern right over here? Do we see that same layer of glass effect? It's as though there's an invisible piece of glass between where they went and that level. So imagine we could take this pattern now and cock it 20 degrees so that all the lines were flat again. It's behaving like the miss by a tick phenomenon. Okay, so now considering the 50% line is also a resistance line, I want you to think about it. Ready? We came all the way down to the level. I want to go. I really want to go. Why can't we touch it? Forget this. And Gary, they come all the way back to the next line. Where are they headed? Most likely, based off of that phenomenon, to the line above it, which is here. 2352, 2351.75. Okay. Is everybody good so far with that understanding? Remember, when I do these videos, that I'm doing it from a position of learning with you. My perspective is one that the more I do it, the better I get, the more that I learn, the more that I add. So there were no 6 laws 2 years ago. There were no time resistance laws. There was no understanding of any of this, let alone the angular laws I'm going to teach you in a couple weeks. So this is a very critical thing. And if you go back and watch the video from the last spring pattern analysis, you'll actually see that I have a circle drawn on my charts there. Tim says, yeah, the laws were always there, you just didn't know about them. Okay, so in relation to the prior spring patterns, the only one that doesn't match what we're seeing right now is the one from 2012. And that was the one that just fell apart. And I do want you to see what fall apart means and how there was completion in 2012 at the time resistance lines. There we go. So Gary, over here we had the phase 2, just like we had it over here. And the phase 2 channels were much different than they are now. But I'm going to attempt to just pick them up here real quick. And the same thing happened that we just talked about, but in reverse. Mana mana do 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 do. Mana mana do 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 do. Mana mana do 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 do. So we had that line. We had this line here. And then we had this line right here for the wickiness. Wiki, 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 wiki. And in that case, we had completion. Gary, right here, it came all the way down a second time, and it pierced the line. It pierced it. Nice. Draw a little arrow right to that wick. Try to blow it up so you can see it. Can everybody see that? Over here I have this line, and I'm drawing it where I am because of the way the bodies of the candles are touching it, the closes of those bodies, and the wicks that are hanging out above. So right there. But over here, Tim, it comes, it touches it, and it punctures it right there. So there's completion of the lower line. Then on the upper side in 2012, it comes up and it completes the other cycle. Okay. Now it's supposed to come all the way down and go up to the next level once you have the completion on both sides. Once it came down here, Tim, and touched, it's supposed to close above, touch this, come down, maybe miss by one tick, and then go up. But it didn't. Okay. Same thing up in here in 2012. Check it out. It came up, and you see, Tim, how it missed this one by one tick. The bullish thing we're looking for. Came up, completed this level, and our understanding of the completion was that it's supposed to come all the way down, pierce it, and then come all the way up and keep going. But in 2012, we have this bugger right here, and it closes below. When it closes below this line right here, watch how the pattern continues. When it closes below the resistance line, old resistance became new support. And now this line here is acting as resistance. And you'll notice, Gary, that the wick starts to appear where? The wick starts to appear on this side. Right? Did any of that happen over here? No. No. So all of the other years, back 2011 upwards through 2017, are behaving like this right now. This one is in keeping with that. And so on the spring pattern that we're studying, I want you to see where the wicks are occurring. See right here? That validates the law of 50%, the 50% law. And the 50% law states that when you have two major resistance lines, you can cut the gap in half. So the gap here represents 50% of the space between the two lines. If we come back to the Euro US dollar example, what we started to notice was the following. If you had two large lines that were big gap between them, like here, Gary, I could take a fib tool and I could pull a gap. And watch what happens when I do. Can everybody see the reaction at those levels? Right here and right here. I can take any two lines where there's a large gap and I can cut that gap in half and create an auxiliary resistance point. So what I just did there, I'm going to do here, and watch. Look at where that line lines up and where the resistance start to kick in the future. I can do the same thing down here, watch. And now that line behaves like the other resistance lines do. Well, in the S&P, if I cut the main gap in half, I get the blue line. I can take that blue line now and cut that gap in half again. Right here. And so now these dotted red lines represent the 50% of the 50%, or the 25% lines. And can everybody notice what just happened at the lower 25% line? What does that tell you, or what does that seem to indicate, Gary? Which one of the laws are we observing? Missed it by a tick. And it came all the way back up to this level. So it seems to imply that if we miss this, we should come and at least put a large wick in up here by 2351.50, which has been a level that I've been talking about now for weeks. 51.50. Other than the fact that it's a Van Halen album, maybe that's why I keep remembering it. I didn't think of it till just now. It's one of my favorite Van Halen albums. You know what I gotta do. Don't judge. So that level that I've been calling out at resistance 51.50, just want you to see how the market reacts to it. And I want you to see all the touches that have been here. Right here, right here, punches through it, but all along back in here and back in here. Gary, it's a hot line. I keep coming back to it. I call it a magnet line. Makes me sound smart when I say it. Okay. So we have not fulfilled the 2012 sell in May and go away elements of that pattern. What does that tell us long term? Where are we in relation to that high? It tells us that at this point in the cycle, right here, something important was decided. When it missed by one tick, Gary, it told us that the capacity to come here was really, really high. And so right now we have just below the low, $23 away. And if we reattack the high, it's $50 away. So it's better than a 2-to-1 risk reward at this point for longer term options for stock purchases based off of what we know about the pattern. Today is also a phase 3 day. This is important in the pattern. In the upper right corner, you'll see here in 8 hours and 8 minutes, we're going to have a phase 3 dot. And a phase 3 dot, historically, is a little red dot. This was the last phase 3 before that. This was the last phase 3 before that. Okay. And inevitably, there are these violent punches up around a phase 3. Do you see that? There are violent punches up around a phase 3. They use phase 3s lately in our uptrend to trip stops. Okay, so in terms of our pattern over here coming into a phase 3, I would expect wickiness above this line short term. Does that make sense to everybody? There should be, if I'm completely wrong and this pattern drops another $130, I would expect them to, at the very least, come up and miss that line by one tick. So Tim, right now the potential is from 45 to 51 in that area. So at the very least, I'm expecting a 6 or 7 point push up right here today. All right, that's enough inhaling. Too early for that junk. Any questions about the spring pattern and what it means for us in terms of the way that the banks missed that last level and now are progressively walking up the steps? Rule number 6 states when you have the last two levels of resistance, you can project the next level up this way. You take the last gap, the last known gap, and time resistance works in a way that you can repeat that gap. And there we go. So the very next place we would expect it to go, does everybody understand why I'm drawing this? It's 23.84 half. before we have any kind of resistance. The next level up from that is halfway between those two lines. The next level up between those are these. Just using the same laws. This becomes less like trading class and more like physics class, doesn't it? And so I'm giving you the levels along the way up towards the new high. Alright, I'm going to load this video up to YouTube, and I'll make sure I send out a link later today.